Hi, Mike Flores here, co-founder of Trade Prosper, and in this video we're going to talk about the killer crossovers. Now, basketball is one of my favorite sports, and my favorite position in basketball is the point guard. One of his best moves is the crossover, and I'm going to show you how the crossover is a very powerful move in trading as well. And by crossover, I mean the moving average crossovers. Now, the moving average crossover method, it's very simple. Many people say that they don't have a lot of time to trade. Well, this trading technique gives very few signals a year, so that excuse doesn't apply here. Now, I'm showing you this technique to show you that catching the big trend can be hugely profitable. This technique is a proven profitable system that takes little time to implement, and I know that's what most of you are looking for. Let's begin. First, let me show you exactly what the moving average crossover is. Now, we're going to stick with the 50-day moving average here in red. As you can see, when I scroll over it to the left, you see moving average 50. And then we're going to stick with the 200-day moving average here in purple or pink. You can see on the left it says moving average 200. Now, there are many other popular day counts that people use. Most are shorter terms and you'll generate more signals, and we'll talk about that later on. But for now, let's stick with the 50 and the 200 day. So looking at this chart, we have the heating oil futures chart. And we can see here on this day, the 50-day moving average crossed below the 200-day moving average. Okay? So we can see by looking at the charts that the 50-day moving average at 2.8827, the 200-day moving average is 2.8844. You can see that to the left of the cursor. Now, on this day, you would have gotten short the market on close, which means you would have got short at the end of the trading day, right before the market closed. Now, your stop could either be the point of crossover. In this case, that'd be a pretty good stop. Or you can use a previous resistance level, or swing high level, or any other resistance level that you're accustomed to using. In this case, a resistance level could be this point here, but for this example, we'll just use the crossover. Okay, so you get short on this day, and you can see that the market did nothing but go straight down. And you'd make a lot of money on this position. So how do you get out of this trade? Well, the way you get out of it is you wait for the cross to happen back the other way. So that means that you would exit this trade when this 50-day moving average crosses back above the 200-day moving average. On that day, you would exit market on close. For now, you stay short and you have a bunch of profits on your side. Now let's look at a recent example of the moving average crossover to the upside. So same thing. When you see that the moving average, the shorter term moving average, again, the red line is the shorter term 50-day moving average. The purple or pink line is the 200-day moving average. And you can see that on the chart to the left of the cursor. You would get long the day that the shorter term moving average crosses above the longer term moving average. And on this day, you can see that the 50-day moving average is at 102.68. And the longer term moving average is at 102.65. So you would get long on the market on close, which means at the close of this trading day, you would buy at market. Now your stop could either be, again, the crossover point or another form of support in this case. So it could be these lows down here. Now we're going to stick with just using this crossover point for now. And you can see that you would have never been stopped out of the market. Never do you get back below this crossover point. Actually, never do you get below this support level. And this is the way you trade this crossover. And you can see it's a very powerful trade. Look here, you have a whole huge move here from 106 to 114. That's a lot of pips. Now, what I've just showed you is the basics of the moving average crossover system. And I really like this because it's really powerful, and you can see you catch the big trends and it doesn't take a lot of time to do. And it's pretty simple, right? Now, My colleague Billy is going to show you how to use the moving average crossover system with options later on in another section. Now that's a real good way to profit and have less risk involved by doing the moving average crossover system. And he'll show you more about that later on. Now I couldn't mention the moving average crossovers without mentioning two common terms that are used for this crossover. So when the 50-day moving average crosses above the 200-day moving average, that is called a golden cross and is considered a bullish indication for the market. So this cross here is a bullish indicator and it's called a golden cross. The opposite of the golden cross is the death cross. So when the 50-day moving average crosses below the 200-day moving average, which happened here in our example, that is called a death cross. Now those two terms only apply to the crossover of the 50-day and the 200-day moving average. They're watched by many traders, analysts, economists. So when you hear that term, now you know what it means. So you can see that the moving average crossover is a very powerful technique and one that works really well. Now there are many combinations you can try out, but for right now I've showed you the 50 and the 200-day moving average one. The reason why I like that one is it gives very few signals throughout the year, so you can put the trade on and not worry about having to adjust it daily. Also, you can use options again to really supersize this technique. And again, Billy will show you how to do that in a later section of this course. Okay, in the next video, I'm going to show you guys how to use two shorter term moving averages to get the same effect. Now, I'll see you guys in the next video.